Welcome to Wall Street Confidential. It's a special Valentine's Day version of Wall Street Confidential. I'm Greg Greenberg, along with the hopeless romantic Jim Cramer.
Good to be here.
All right. Unfortunately, what we're seeing is a St. Valentine's Day massacre for employees of Daimler Chrysler,
Right.
But the stock's up. What's going on in the auto sector?
Look, we have something that's really amazing. We have good demand in autos, and we have companies that can't make them profitably to meet the demand. This had always been a decision that Ford, GM, and Chrysler have always played with, which is market share, market share, market share. The fact that Daimler today joined Ford and GM and saying, listen, we're taking market share off the table, we're going for profitability, is remarkable because now you have three companies going for profitability, so they become small cars, not small cars, but they become much less of a powerhouse in autos. Toyota then takes over. Toyota can meet the demand, so you have all four flying.
Well, it seems like Ford just kind of stays around 8, and the rest of them keep going up.
I mean, remember, Ford yesterday said, someone came out and said, sell Ford. You can't sell Ford if they are going for profitability. But you can't, and if anything, what you want to do is own these convertible pieces of paper and own their bonds. Because this is a first for Ford. They have never, ever gone for profitability.
But if Ford goes bankrupt because of those asset-backed security deals, you're going to be owning those plants.
Can't go bankrupt. The liquidity,
too big to fail?
No, the liquidity's big here.
All right.
They have big liquidity.
All right, but know who it seems like everyone's going after? Even though the car makers are in such disarray, people want the auto parts manufacturers. All that smart money is going after Lear, Johnson Controls, Exide, all those stocks are flying.
52-week high again. Now, there's a lot of dedicated money run in a particular way, which is auto parts, okay? Literally, major mutual funds devoted to auto parts. If you're a major mutual fund and you've got the money, there's no way you can put it in Ford, GM, and Chrysler if you can put it in Johnson Controls. Lear, my friend Rich Bezzina, arguing for still a higher bid. Wait a second, Rich, you got in with a 21-22 basis. Now you got to get a double? Is that the deal? Let's not be so greedy. I think that Johnson Controls goes right through 100. I think that Lear can get a $41, $42 bid, but not a $50 bid.
All right. That's cars. Let's talk about restaurants because it's Valentine's Day. A lot of people are going to be taking out their sweeties to eat this evening. Well, we hope. You had a piece earlier today on Applebee's saying it's a little bit overvalued compared to the rest of the group.
Well, look, I am all a big believer when you can go after a company that has a low price to earnings multiple that has underperformed. Applebee's is up 14% year over year, and it sells at a 23 multiple. As someone who actually goes to Applebee's, unlike I think the slate that's been put in, or they started going after they took their positions, I can just say this is the kind of deal that will create a backlash. We had a tremendous period in this country where we had hostile takeovers, and which was bountiful for the stock market. And then we got a kind of a pretty much of a backlash. The defense lawyers managed to put in things like poison pills that made it so hostiles couldn't happen. This is going to happen again. It's interesting that this one's being done by Breeden, who used to be the head of the SEC, but I'm looking long-term and thinking this is a really bad thing. We can't have every board under siege, including the performing ones.
Well, just from an evaluation standpoint, it seems like you have Brinker, you have Darden trading about 19 times, and people are going after Applebee's when it's 23.
Right, Applebee's is clearly not as good.
And it's got a lot of debt. The current ratio is about 0.5.
They did say in the papers today that it's a bountiful cash flow. One of the things that we know from restaurants, and anyone who did the Church's Fried Chicken deal in the 80s knows, at that point it was American. The cash flow just can be turned off on a dime here. Denny's too. So I really don't like this deal. I do like Chipotle going into the quarter. I don't like the fact that Applebee's is being put up for sale because I just genuinely believe that they're going to go to Congress and say we got to stop this nonsense.
All right. Speaking of Congress, there's a guy named Bernanke talking to them right there. Right. Any words on what Ben's doing?
I watched the conventional media the moment after he finished, and they were saying, "Well, it looks like he still might tighten," and I just wanted to scream because everything about what he's saying is inflation lessening. He's looking for an excuse to cut. Why don't people see that? Our rates are the same as Hungary's, Bulgaria's. Our short rates are way too high, way too high, and totally out of whack, given the fact that unless you're doing business overseas with the rest of the world, your business is bad in this country. And it is just driving me crazy to see the conventional wisdom reading him negatively. There will be a cut in May. There will be a cut in May. He's laying the groundwork in February for that. That's when the peak of the commodities were. you think I'm wrong? Look at the stock market.
I'm watching it go up.
Yeah, because the market reads this, not the media. The market understands that the cut is coming. That's why accredited home lenders, LEND, is up on a day when it should be down big because they won't even talk about guidance. It's why Countrywide CFC continues to go higher. It's not a case of subprime wipeout. It's a case of the companies that survive in subprime are going to make a fortune.
All right. Listen, take some of the money made from Cramer, spend it on your sweetie tonight. It's Valentine's Day. Thanks a lot for watching Wall Street Confidential with Jim and myself.